Hello, I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And if you like these posts, remember to hit the like button. Or if you like them too, make a comment so we know what you think about them. Really appreciate that and help you out. All right, we're talking about penalties of business today. Some strange stories happen at Nike with Stephen Curry. Why don't you tell us about it?
Yeah, well, it's Stephen Curry.
That's what I said, Stephen, right?
You said Stefan.
All right, well, let's tell the story then. We'll stay with that.
Get a little ahead of yourself here, but yeah, back in 2013, Stephen Curry was a free agent to go sign with whoever he wanted to endorse him. He was with Nike before this, and they gave a presentation during his free agent campaign, and they blew it big time. They called him Stefan. Sorry, and then they also had a slide on there for Kevin Durant.
Yeah, I mean, this shows, and we're not talking a small little presentation. He's number one NBA, is that correct, or something? Right
yeah, and I mean, before 2013, he was still kind of finding his rhythm, we'll call it,
right.
And now he's one of the best. Actually, is the best player in basketball. I'll say right now, he won the MVP last year, won the championship, and big name in basketball. And as you can see, he signed with Under Armour.
Right.
He's now estimated to be worth $14 billion to Under Armour.
Wow.
And, he blew it pretty big. And, Del Curry, his father, was sitting in on the meeting, and he said they didn't even try and correct his name when they were giving the presentation. If that's your client, how would you feel if they didn't even try to pronounce your name correct?
And the other important thing, too, that when we read about that as well, is that his dad didn't say anything. He just sat there very quietly and said, I'm not going with these guys. Right?
Yeah.
So you never know. Make sure you know what you're doing before you get into stuff. Make sure you know Stefan, what is the difference, especially if you're doing a presentation. Business is so important. People won't tell you why they're not doing business with you. They'll just walk away.
Yeah. Always important to do the right thing in business so you keep the client. Clients are always very important.
Exactly. All right. Let's talk about pending home sales today. They were up. They kind of blew the street away here. Month on month, over 3.5%. So a great report today.
Yeah, I mean, the consensus was looking for 1.5%, and even the range was 0.5%, and the high end was 2%. So it came in at 3.5%, well above that high-end estimate of 2%. And Midwest was the big winner here, as they were up 11.4%.
Right. And the good news, well, this could be good news for existing home sales, and the difference between pending home sales and existing home sales is pending home sales are what contracts signed, but haven't been fulfilled yet. Mm-hmm. And existing homes have been fulfilled.
Correct.
So that's why you want both this. So this is like the precursor to this. So it shows we're on a great path for home sales, which is a great path for the economy. Because when you buy a home, what do? You buy drapes, you buy furniture, you buy TVs, all kinds of things for it. So it's a great thing. Mm-hmm. Let's stay on the Nike theme here. Talk about Nike. Here's their stock. They reported earnings last week. Current price right now is $61.34, 52-week high $68.20, and the low $47.25. So that's where the stock stands right now. We've had a nice run up here over the time frame, but is the run up over? Well, let's take a look here. Stock fell 5% after missing sales. Maybe because I had bad presentation.
Yeah, it did kind of fall, and I'll kind of give it away. This is a company that is overvalued. Mm-hmm. So everyone's looking for this growth in sales, and I'll tell you, they had a pretty good quarter. Sales were up, good size. It just wasn't as high as everyone had anticipated. So that's what happens with those growth companies. If you get too overzealous on it, I'll call it, the stock can fall, and that's what happened when they reported. Looking at the balance sheet, always very important for us to take a look at. Current ratio 3.06. Debt to equity of 16.71%. Very strong balance sheet. Profit margin here, too, I took a look at 11.84% versus the industry average of 9.54%. Nike is just, a really well-run company, except for that presentation, unfortunately.
And they're doing a great job. And again, their profit margin above the industry, so they're doing all the right things. But here again, it's another company that's a little bit too pricey. We can see that because going up to May 2017, earnings per share estimated $2.45. Target sell price $40. I mean, that's like $20 below what it is right now. So like the company, there's some great things. However, maybe Under Armour is going to come along and just take their sneakers away from that.
Yeah. Well, I'll tell you, I love Nike, love the company. Yeah. As you can see, well-run company. Just
I don't have shoes on now, but I do wear the shoes.
Just overvalued, and this would be a company I would love to invest in if it was fairly valued.
Yeah. be patient. That's what investing is.
Yeah.
Be patient. So, alrighty. So I know this investing thing, gosh, kind of hard. We get calls on the radio show. We get contacts from people. You want to come in for a free consultation, talk about investing. We love talking about investing. Give us a call at 858-546-4306 or go to the website. A lot of people go on the website and contacting us. SmartInvesting2000.com.
And don't miss any upcoming daily briefings. Join our Facebook group, Smart Investing with Brent and Chase Wilsey.